Looks like it'd probably be better to stand right there and get a better picture. When you're doing New York loans, there's a few things that you have to keep in mind. Now, this is not all of New York. This is for like if you're going to be doing like probably in the larger cities. Everyone's getting New York leads, not just Kevin. Okay, so yeah. So there's some certain type of properties that we need to really pay attention to if we're going to do them. They normally come along with very big loan amounts, but there's a lot of things that you need to be aware of. I don't want to put fear in you, just you need to be aware of it. That's all. So, Sean, why don't you come over here, stand probably right here so the camera so you can see a little bit better.
Oh no, you mentioned something in New York. I was doing the FHA 203K.
Oh, you were doing.
Yeah.
Oh, who was doing the C? Oh.
But yeah, if you want me to do New York, I can go off.
Oh, wait a second. Who was doing?
But no, I got
the New York training.
I got the 203K and the 203KS.
You're doing 203K?
Yeah.
Okay. For some reason, I thought you were doing the co-op and the SEMA loans.
Yeah.
Okay, that's okay. That's fine. We can do it. Well, it's another training we'll have set up. That's okay.
Okay, perfect.
For some reason, I don't know why I had that written down, but maybe it's for a future date. Okay, so actually this is great because you've had a lot of questions about 203K. Someone called the end of the day, you didn't know what to tell them, so you passed it off to someone else, which is fine. Inevitably, you're going to have to get that pretty quick. But they did a census, I think in 2014, that 70% of the homes resale on HAR for Houston need some type of repair or renovation.
Really?
Yeah.
70%?
Yeah.
Wow.
So of resales, not new homes. So you have people calling all day asking about renovations and repairs, and you need to know how to properly explain it to them. Now we have sent you out videos, we sent you out booklets. You must read through that stuff. Okay, it's not there just to sit there. You guys got to go and read through it. I've read through it many times. You guys got to read through it too. You got to schedule it and do it. So it's very important. The videos are good. Reading the booklets are good. I think Sean's going to do some key takeaways, and even on the LO hacks, there's some quick things that you can reference. You don't have to know every single thing about it, but just knowing the details so you can articulate it to someone when you're talking to them when they're inquiring about the program. And so 203Ks are really good. Lenders don't like to do them, and so I like them. So because they pay really good and nobody else wants them. So, and that's just how my model is. And so I take whatever else doesn't want. So
how come there's not as many people that are looking for those type of loans?
No, there are borrowers that are looking for the loan. I'm saying the lenders don't want to do them.
Like as far as leads, do you get a lot of 203Ks? Mm-hmm. Oh, we do? Okay.
Well, what happens is that, again, I mean, through the evolution of a lead, they don't. A lot of times they don't inquire as a 203K. It ends up as a 203K or an escrow repair because the house that they want needs something. 30% of the people you talk to after they go look at properties are going to say the house needs work. All the time.
Do you think that could be used, and I'm just using this kind of like a selling tool? I mean, if somebody's already, let's say they're coming to us for USDA, right? And they're telling us, hey, I already got FHA with Quicken Loans or whatever. I'm coming to y'all for USDA. Can you help me? And then we see that they're not in an eligible area or something like that. No, we can't do anything. But we do offer 203K. Can we come back at them like that? I mean, to see, hey, is the house in good condition? Would you like to? Because a lot of people would love to do renovation or repairs.
Yeah,
like
yeah. I mean, that's the whole thing behind it. Is that look, you could tell people, and there was a loan officer that we had. That's all he sold was a 203K, and so he called it the dream. And he told everybody about it, and he was always trying to increase everyone's loan amount, and he felt that if he could sell that loan as a hey man, you can get new cabinets, you can get granite countertops, we can do a new floor. That if you package it like that, it would make it irresistible to the borrower, and then that way they wouldn't go anywhere else.
Yeah.
And that was his pitch. He did very good at it, and so he just wasn't a good loan officer. And so, but he was very good at selling that. So, and so yeah, you could definitely do that because you're right. I mean, you can with a streamline, you can add a lot of things. You can't do anything structural or foundation or any luxury items, but you know, it's definitely something that you can have as a good pitch. And so don't be so concerned about what the person's inquiring about it. And again, we said it earlier today. It means it's totally irrelevant what the lead says. It could say mobile home. Who cares? The only thing that matters is if you can close them. You know, it's just like we talked about the guy that goes to the car dealer. You know, he comes in for the minivan, he leaves with an Escalade. It happens all the time. And so it doesn't matter what they inquired about. Just can you get them closed? And so you got to get off of all this stuff that you think that you guys don't know. You're too new to know. Okay, so you have to follow the fundamentals, the mechanics, and you'll be successful at it. So all right, you ready to go?
Yep, ready. Okay. All right, guys. So the 203K. You see a lot of these shows with renovations going on, HDTV, so it's popular. People like to see something from ugly to beautiful. So that's kind of what they're going for. You're looking at these REO houses or these houses that are dilapidated that usually a lender would not give you money for because it's of the shape of the house. On the REO properties, usually they get beat up pretty bad. People are, hitting walls, taking out appliances and so forth, but it doesn't mean the house is any less worth to you because you see the main goal at the end is to get everything back in the house in living condition.
I got a question.
Go ahead.
This loan is not just for houses with extreme issues, right?
Of course not. No, this is, there's two types of loans, 203K and a 203KS. Okay, 203K is going to be your loan with structural damage, and but the foundation is still there. But there's got to be some major structural damage, and it's going to be a much higher renovation than just buying appliances or so forth. This is major renovation: walls, roof, stuff that's structural. Okay, and that when doing those kind of renovations, there's actually a contingency there. It's about 20% contingency that says, well, if we go over the cost, we'll be able to satisfy that and not be able to, go under cost and have you pocket out of money at the end. So they have that 20% contingency. Also, they also have a 6-month provision where they'll give you mortgage to go live outside the house while you're getting the repairs done. So it could be a total, sweep with just the foundation, and you can build that house right back up in 6 months while living in another property. So that's, again, that's the, where you can buy low, fix it up, and in a couple of years sell high and make some money off of it.
I got a question. You say 6-month mortgage provision. What do you mean by that?
Okay, so the provision gives you about 6 months of mortgage payments within the loan. Okay, so what it does, you can live elsewhere while you're remodeling, but still pay the mortgage payments on a new home. So it gives you that provision. So so you don't have two rents or two mortgages going on at the same time.
Right. So you don't have to pay while the kid.
Exactly right.
No.
They give you the money. They give you the money to cover the 6-month provision. So if it's the mortgage is $1,000 a month, they're going to give you $6,000 in the provision to be able to go and fix the house and not have that out of pocket to pay the second mortgage.
They're going to give you the money, or it's padded in the loan.
It is padded in the loan. Excuse me.
Yeah,
Yes,
so they're not going to actually give you the money, they'll borrow the money.
Of course.
They're going to just add it to the loan. So
You pay that back later once you move into the house.
It's inside the loan, right? So you're going to be more financing that throughout the life of the loan.
But it doesn't start until you move back in?
right.
Correct.
Right.
Yep. So the difference between the 20K and the 203KS, the streamline is up to $35,000. Okay, so you cannot above your purchase price, $100,000. You'll have $35,000 above that purchase price for lighter repairs. This is paint, appliances, stuff that's not luxury. You can't do tennis courts. You can't do pools. Can't do a basketball court.
You can do a roof.
You can, yes, but as long as it's under that 35K mark. Exactly, right.
You can do furnace, AC.
Right. Some of those things are going to be decks, patios, bathrooms and kitchen remodels, flooring, plumbing, new siding, addition to the house like a second story, heating, air conditioning systems, HVACs, and more. Appliances are big in the REOs because those usually get taken. Those are the first thing that gets taken or they get ruined. So again, looking at the REOs, bank-owned, a majority of them are going to need a little bit of work. So that 203KS is big with those. It's not like you have to go in and rebuild the house, but you want to make it where, hey, this house, I want to make it mine, and I want a little bit of income or, asset on top of my purchase price to be able to do that. The program does not cover so-called luxury items like I was saying, spas, pools, stuff that's above and beyond, bowling alleys in your house. It's not going to fly.
Helipad?
A helipad is going to be luxury item as well. But again, it's going to be mainly for people who want a house that's a little bit under valued and doesn't have everything they want, and they can put a little small amount in to get it. So how much money can you get? The maximum amount of money on the lender depends on what type you get, the regular or streamline, like I said. The max you can get for the regular 203K is the lesser of the two amounts as follows. The as-is value of the property plus repair costs, 100 or 110% of the estimated value of the property once you do the repairs. With the streamline loan, you can get the loan for the purchase price of the home and plus $35,000 on top. So again, purchase price of $100,000, you can get up to $135,000 for this loan, 203KS. And for the 203K, if the appraised value is $200,000, you buy the house for $100,000, you're going to have about $100,000 in repairs there, plus that $20,000 contingency if you go over that. So you're going to have close to $120,000 in repairs. So what kind of properties qualify? 1 to 4 bedroom homes, 1 or 4 bedroom unit homes that can be completed in less than 1 year. They don't want a long drawn out construction or remodel period. A home that has to be torn down, provided that some existing foundation is still placed. So the house can't just be totally torn down to the gravel. It's got to have at least a foundation and still in place. And then a home that you want to move to a new location. If you don't like the property that's at, you want that same house moved, that can be in your house as well. And not a lot of times that's happening because we're not doing mobile homes, but the modulars, and sometimes nowadays they can actually put matchstick houses and move them. And then the homes that cannot be a co-op, but some of the condos are eligible, and you have to look up on the FHA website there to see if they're even eligible for an FHA. Your property also have to qualify under the usual FHA requirements. For example, its value cannot exceed a certain maximum amount, which depends on where you live. For the 417 amount or whatnot that they have going on for those loans. So what are the pros and cons? The main benefit is it gives you ability to buy a house that needs repairs. I mean, a lot of these people out there, they're looking for houses that in that $500,000 neighborhood, but they don't have that kind of money. However, if you look and go buy a $300,000 house and possibly put $100,000 in it, you're still $100,000 below the normal appraised value of the houses that are around you. However, with those upgrades, your house could appraise $100,000 above, and you have equity in your house. So it's a way, again, to buy under an area that you don't feel that you qualify for. You can buy a house that's well under market value, needs help, needs renovation, and no one wants to touch it because people moving in there already wanting to buy the $500,000 built-up house is already done. Plus, the down payment requires minimal, and often you get the decent interest rates on these because it's FHA government. Let's see. Now, the downside. There are limits on funding, and you get to apply for the loan. It's not easy. The reason for it's not easy because there's a little bit more qualifications on these, money down, out of pocket, and there's a lot of paperwork with these loans. It's because everything needs to be itemized. So a lot of times people have to hire a side consultant to do all this itemization, either because the contractor doesn't want to do it and you don't know how to do it. So sometimes there's extra money in hiring a side contractor and so forth to do the itemization if your contractor won't do it. Another thing is that there's a lot of detailed paperwork above and beyond the normal. However, if someone has the money out of pocket, has the will to go out and do the construction and have the timeline to possibly live in another house while this gets done, or live in the house while the construction's getting done around you, the paint, new appliances, and so forth, it's right up their alley. So that's pretty much the 203K and through the S in a nutshell. Go ahead.
So say you're a buyer and you want to do this program. So what time, say you have to get a detailed proposal, when would you do that?
Right, you have to do that before you even actually get the loan. It has to be processed on exactly what you need, and that's the reason why it's so hard, because everything has to be itemized, every single thing. So the contractor should be able to do it because they're there, but sometimes they're not wanting to do it, and you have to hire someone to itemize your list for you. Especially if there's different contractors coming in, it's not under one general. Everything has to be itemized. Okay, so this renovation programs at a glance, you're going to see fixed rate, 30 or 15 years, just like a FHA. Eligible borrowers, owner occupied. This isn't a flipping program or anything like that. You have to be owner occupied on this. 1 to 4 family is occupied, mixed use, and some condominium units are available on this and eligible. Normal FHA limits, same as the 203B. That's the exact same thing as the FHA. High balance, loan amount cannot exceed statutory limits for the area, same as the FHA loan. The calculating loan to value, maximum LTV is based on the lesser of the sum of the purchase price plus renovation amount, or 110% of the after improved appraisal value of the property. So the FHA LTV purchase, 96.50, and also the refinance. Person owns the house already and wants to do some refinance and repairs on their property. You can also do that with 97.75 refinance LTV. So that's another option. If someone's calling you wanting to refinance, you might want to ask them if they will need some repairs on their house, and they can jump into this loan. So the mortgage insurance on this, it requires upfront MIP, and it's going to be the same as your regular FHA. So that's all I got. You guys got any questions?
Yeah, can you do an example of one? Like, let's say I'm a caller.
Sure.
I would like to do an FHA loan, 203K. Tell me what, let's see, I want, I found a house, $100,000.
100,000, okay. Great. So what's going to happen is the purchase price plus renovation amount, right? So if you're going to go through and you're going to itemize everything that's going to be done on the house.
Okay.
So whether it's construction on the drywall, everything's going to be itemized and priced out.
Okay, so I'm a buyer and I'm saying, okay, I kind of looked at it. I'd probably say it would be like, $15,000 in repairs there.
Right.
How does that work then?
So if you're asking me 15,000, it's not going to be the 203K. It's going to be the 203KS, because really with 15K, there's not a lot you can do structurally to a house. I mean, you're talking, it's not going to be needed for that, right?
No, just maybe like the AC unit.
Right. Yeah. So that's going to be on the streamline, and again, that's going to be whatever you pay for the sell price plus the itemized report up to 35K of what everything costs. That's how it gets run in there. So as long as you have that itemized report and you put that in with it, that's why it's so slow, because we need that before we even put in the application.
So the itemized report comes from
the contractor.
So I tell the borrower, you need to get with the contractor,
Yep.
Go to the home, get an itemized report from them
Correct.
on the cost
Totality that needs to be done.
of the renovation,
Correct.
whatever that you wanted.
Yep.
And
So-
then once they have that, send it back to you,
Correct.
and what are you gonna do with it?
So we're going to do that, and we're going to put that into a loan amount. So you're going to take the sell price plus the itemization of everything that they need done, and that's the loan amount that you're going to pre-qualify them for.
Okay.
Yep.
So it's pretty similar to FHA.
Exactly. Yep. Exactly. So the reason is because you got to wait for that. A lot of contractors, there's different contractors for different things. The streamline, usually you're not going to have that contractor. You can do that yourself. You're going to get a Kinmore washer and dryer. You can do that yourself. It just gets down to where you're talking structural, you're talking drywall, all that stuff. It's going to be a contractor that has to do that out, because you're not going to know that. So if the contractor is not wanting to do that, or there's multiple contractors, you can actually hire a consultant to come through and do everything for you on that. That's again additional cost if you don't have a general contractor that's willing to do it, or if you have a ton of contractors coming in and each one of them is going to be too hard for everyone to give you that. So you can get a council to go ahead and do that. I would suggest getting a general contractor and just having that general contractor take care of all of it for you, submit what he's going to do, and go from there. Anyone else? Sounds pretty easy. It's right along the FHA lines. However, it's just for the construction and repairs for houses that need it. So
When would they do when would they get the bids from the contractor? Before they put an offer on a house or after?
correct, before, because you got to know exactly if you're going to be able to have the house.
Is that how you achieve the potential appraised value, whatever?
Correct.
Just through the
Through the
contract bids?
itemizations, right? Through the bids.
So Sean, when people call in and they ask like, is there any way I can get money back to buy appliances and stuff? Do you ever get people like that?
Of course.
So what I would tell them is, no, you can't get money back, but what we can do is we can include that in the loan
Exactly.
and transfer it to an FHA 203K. So if they did want to do that, because I've had several people ask about that, I can say, yeah, we can do that for you. We'll need basically an
Itemized report of everything that's going to be done to the house.
all the appliances that you
Right.
want. They give me that back, put it in there, set it up as 203K.
Right. Along with your normal documentation that you need. So that's where people say it gets confusing and long-winded, because you do need the reports, and it gets to the point where, well, if the reports don't come out or the house gets sold or something, you just did all that for nothing. So again, it's a process, and that's why they say a lot of paperwork, because you need all those reports before you can even get them pre-qualified.
Is there like a standard report, or?
No, it's just the itemization from the contractor, and it was, as I read it, a lot of contractors, they'll either do it or not. They'll say, yes, I'll itemize it for you, or no. And that's when you have to go and hire a consultant that comes in and do it for you. But most of the time, the contractor wants your work, he'll do it for you.
Say you have somebody call and they say, well, I want to do a lot of the work myself. I want to.
Cannot do the work yourself.
Okay.
It's got to be a contractor.
So this consultant, you're paying them out of pocket,
You're paying them side out of pocket to do the work for you, yes, because
and you're not going to be. And that's
I would find a contractor that would do it, a general, before I would even take that route. However, it's known that people will take that route because they don't want to deal with the contractor. The contractor is not wanting to do it.
And paying that consultant is not something that can be recouped through the
Correct.
loan.
No.
Okay.
Out of pocket. So that's another reason why people stray away from these loans, because they don't want that out of pocket expense or whatever. So, so if you guys have any other questions, you know where to find me.
Where you be at?
Sure. So, are you still going on there? So the home style is primarily where we're talking about those luxury items. How do we get those luxury items in? Well, the home style, the conventional home style, deals with that, and it's a Fannie Mae fixed rate, 30 to 15 year. Okay, eligible borrowers: owner occupant, investor, or second home. So you see it's a little bit more luxury item, more to the point where you're going to put in a pool, going to put in that tennis courts or something like that. You have Freddie or Fannie conforming loan limits. The difference between there is primarily your one unit. You're going to have different LTVs for each 1 unit, 2 to 4 unit, second home, or investor. You're going to have different purchases on that. Now, for the investor, the purchase has to be 80%, so you got to have 20% down as an investor to want to do the home style. For the second home, you have to put down 10%. For that 2 to 4 unit, 75, you have to have the LPD, so you have to put 15% down. And the 1 unit house is going to be 5%. So it's more of a conventional than the FHA. You're putting down 5%, not 3.5.
And what's the max on that one?
The max on this is the lesser of the sum of the purchase price plus renovation, or the after improved appraised value of the property. So it's either beforehand, the sum of the purchase price plus renovation amount, like we were talking about, or the after improved appraised value of the property.
Okay.
So with the 203K, it was the after appraised value of 110%. On this one, it's just 100% of the after repairs?
I'll tell you right now.
Okay.
This is for the home style. Maximum LTV is based on the lesser of the sum of the purchase price plus renovation, right? Or the amount, the after improved appraised value of the property. The FHA 203K is the sum of the purchase price plus renovations, or 110% after improved. So you're correct, 100 and 110. So
110
you're getting that
for-
probably because it's the FHA, it's government backed.
Okay.
That's why probably you're getting that. I
That
don't,
makes
I don't know
sense.
the reason why, but it's 110 on the 203K B. So so any questions on that?
Good job, John.
Thanks.
Yay!
I'm gonna have Josh step up and he's gonna correct any of my errors that I might have told you guys. But
What you need to learn from this is sales. This guy that's selling this product, he did a good job actually. You started learning about it yesterday.
yesterday,
Yeah,
I picked
so
it up,
that's pretty impressive. He did a really good job. What else you guys talking about?
You put on home style?
203K in home style.
Just don't sell it. Yeah, you don't.